What if buying a property in Melton, which is in the west of Melbourne, costs you $63,000 in negative cash flow before it even starts paying you anything back? And what if after 11 years, you're sitting on over $446,000 in usable equity? I'm Gilbert, a property investor and founder of SuburbsFinder, a property research tool which is now used by thousands of property investors, mortgage brokers, and buyer's agents across Australia. And in this video, I'll walk you through what that journey looks like using real data on rental performance, supply and infrastructure, and buyer demand, plus a 30-year financial model. But just to be clear, I'm not giving any financial advice, just presenting what the numbers reveal so you can think it through for yourself. Or you can print the report and go through it together with your accountant or mortgage broker. Let's define the investment scenario. We're buying in Melton, Victoria, and our budget price is between $550,000 to $600,000, and our deposit is 20%, which is $110,000, and a combined income of $200,000. Now let's go find the property. So we'll start looking for a property in Melton. Let's check out the properties here. Let's look some properties that is close to High Street, because High Street serves as the suburb central commercial and civic hub. So it's a bustling strip that combines retail, community services, and cultural landmarks. So anything within close to that vicinity, I would say is great. So let's just have a look. So this is 4-bedroom, 2-bath, 2 garage. This is within our price range. Let's go closer. So let's just check. So this is close to this school and this school, which is not bad. And then let's see. It's also close to these 3 childcare facilities, which is great, especially for a young family. And let's see if it's in a bushfire zone. No, it's not on a bushfire zone. Let's see if it's in the heritage zone. So it's not. And let's check the land zoning, making sure it's not on the commercial zone. So currently it is on the general residential zone, just this one. So we're pretty safe. And as I've said, it's close to the High Street, which is the suburbs central commercial and civic hub. Let's just have a look at the house. So it's a 4-bedder. Let's have a look at the photos. Seems like we can add value to this property, but by the looks of it, it's already just need a little bit of cleanup, and we can easily put a tenant in. Hey, there you go. 3 poster Jim Beam. That's perfect. Right. Now let's check the numbers. So click the analyze button. It's advertised for 510 to 550. So what we'll do is we'll just change this to 550 just to be more conservative. Right. So we have the address here, house, and the median house price for 4-bedder is 512. So we're buying it above the median. Better if you can buy it below the median, depends on how you negotiate, but for now we'll leave it at 550, which is still within our price range of $600,000, right? So loan period 30 years, interest rate, let's put it at 6.7, interest only 5 years, and we're buying it combined income. So our combined income is $200,000 and split of 50-50 ownership. Next, we have here 20% deposit, and our stamp duty is automatically calculated. And if you have buyer's agent's fee, you can put it here. But let's say we're not buying this for ourselves. They want to put it to 0. Then the rest are being pre-filled. So let's have a look. Click show charts, and this is what it gets more exciting. So we'll just turn this off so we can focus on the interest only. So you can see here, in the first 11 years, the total negative cash flow is $63,000. And the estimated usable equity, which is based on the 20% deposit and based on the 6% compounded annual growth rate of the past 10 years, it's estimated that our equity is $446,000. Now, normally, this is where most of the investors give up within the 10-year period, but they don't realize long-term, it'll be better. The equity goes bigger and the cash flow comes in because it becomes positive on year 12 or on 2037. So we are carrying a short-term loss for a long-term equity gain. So this strategy is for a long-term period. Now let's look at the supply-demand metrics in the suburb level. So I'll just click the suburb profile report of Melton. So Melton is 35 kilometers west from Melbourne CBD. It has a crime score of 39/100, which means crime happens but doesn't really affect the people living within that area. Household income and mortgage repayments. The population as well is almost 8,000. For the past 20 years, it's always been an owner-occupier area. The days on market is 44 and the median rent is 408 and the 10-year average compounded annual growth rate is 6.01%. And the median house price is 479. You can see here that the days on market started to go down in July 2021. That's the price that started to go up. And right now, the median house price has become stagnant since November 2022. And the days on market started to go up. But over the past quarter, it started to go down, well, only for 2 days. That's for houses and this per units. And we can see here the potential buyers started to increase as well. So these are the number of people looking in the for sale section of different online listing sites. So there's a continuous interest within the area, right? But hasn't really translated into sale at the moment. You see sale listings, you can see it's going down as well. Although vacancy rate is 2.84, still low because it's still under the 3%. That is on a postcode level. But there are only 43 total of rental listings combined of houses and units within Melton. So as you can see here, it is still pretty low compared to where it was 2 to 3 years ago, even though it has climbed over the past 6 months. Stock on market percentage, still it's becoming low. As right now it's under 1%, it's 0.82%. And the median rent has increased by $20 or 7% over the past 12 months. And the yield has increased as well. And there's also opportunity if you want to do rooming house, because on average 20 people looking for a room to rent versus less than 10 rooms that are advertised online. So you can see here there's a huge gap between the two. And development approvals has been decreasing over the past 3 years. So 2021 it was 7,000, 2022 5, 2023 4,6, and 2024 4,000. So if the current stock right now is already tight, rest assured that they'll be tighter within 2 to 3 years time. And currently there are infrastructure projects happening in Melton, but most importantly there's a new Melton hospital. It's budgeted around $1 billion and it's estimated to produce 2,400 jobs during construction. And also what's important is it will also generate jobs after construction because it's a hospital. So around 2029, once it's been completed, or 2030, we can expect that there'll be an effect within that LGA. So childcare facilities, which is good. So there are several schools as well. And currently there are 6 registered rooming houses within the Melton as a suburb. Currently there's no hospital, but soon when the hospital's finished, it will be appearing there. And you can see, even though the socio-economic index for area, say for Irsad, has always been low, there's an opportunity in the future for this to go up when gentrification started to come in. As a suburb, so these are all the data within the Melton area. Now let's look at Melton as an LGA. So I'll just click this so we can see the LGA profile. You can see here that the gross regional product of Melton is almost 8 billion and the unemployment rate is at 5.2%. Australia's unemployment rate is at 4%, while Victoria as a state is 4.3%. And Greater Melbourne is 4.3 as well. So having a 5.2 is a bit higher compared to Greater Melbourne or Victoria as a state or even Australia as a nation, right? So it's a bit high in terms of unemployment rate. So we need to consider as well. It's not a deal breaker, but we have to keep in mind. Unemployment rate has dramatically gone down, which is a good indication, right? And who are the people, or what are the occupations, the people living within that region or LGA? So it's pretty diverse, right? So transport, construction, technical services, real estate, retail. So it's pretty good mix of industry that we have here. And also public community housing. There's some amount, but it's negligible, I would say, right? There's only 482 for the whole area, right? But let's have a look at on the suburb level, how many community housing. So in Melton alone, as a suburb, the concentration is 2.86%, which is equivalent to 101 dwellings, right? So majority are houses and townhouses. So there are no apartment units. This is still negligible amount of public housing. Pretty much same days on market. What else do we have here? Development approvals. So the one that I mentioned a while ago on an LGA level, so that has declined by almost 22%. And in the following year, again, another decline of 16%. And in 2024, another decline of 5%. So in this case, 3 consecutive years of continuously declining development approval, or we can expect there will be less supply in the market. You can see that development approval has been decreasing, but the population has been increasing. On natural increase, it has decreased by 18, almost 13, and almost 15% on 3 consecutive years, while net migration has continually increased, although it has decreased by 7%. But over the past 2 years, 57% and 8%. And net overseas migration, not really significant because previously it was outweighed by an increase of 100%. Majority of the population increase was influenced by natural increase and net migration decrease. Not so much if we're speaking about overseas migration. So natural and internal migration. So if the population is continuously growing and the number of supply or development approval is continuously going down, then we can expect that it'll be tighter and tighter as soon as demand comes in, right? Again, infrastructure projects and Melton as a whole, as an LGA, has an IRSAD score of between 7 to 6. Let's bring it back to our numbers. Holding costs for 11 years, $63,000 negative cash flow after tax. Estimated equity position, $446,000. The big question is, does the short-term negative cash flow make sense in light of future equity access? Not advice, just the mechanics. We could potentially refinance, extract equity, or redirect this into another property, but that depends on our broader strategy. This is the financial journey based on the current and projected data. What you do with that info is totally up to you. And if you want to model this to your own suburb, income, or deposit size, you can use SuburbsFinder to simulate it in minutes. And if you want to learn how to identify suburbs that are about to become hotspots, please check out this video. See you next time.